In the remote hills of West Africa, a discovery promised more than just minerals. It promised wealth, power, and the kind of transformation that can reshape nations. A billion-dollar mining deal was quietly signed, and yet, for the very communities who lived above the riches, there was little to celebrate. How did a deal this massive slip through the cracks of public awareness? And why did so few voices in Africa, where the resources actually lie, have a say in the game that would redefine their futures? Investors in New York and London cheered the projected profits. Governments touted it as a triumph of economic modernization. Analysts, poring over spreadsheets and geological reports, saw only opportunity. Yet, in small villages near the mining site, ordinary families whispered about roads that might never be built, farms that could disappear, and traditions that could vanish under the weight of contracts they hadn't signed. This is a story about more than minerals. It is a story about power, secrecy, and the unseen mechanics of global finance. What happens when wealth is extracted faster than consent, when numbers on a ledger outweigh the voices on the ground? If stories like this fascinate you, subscribe and join us as we uncover the hidden mechanics of global finance. And tell us, what country are you watching from? The hills of West Africa had always held secrets, but it wasn't until geologists arrived that the magnitude of what lay beneath became clear. Satellite maps, seismic scans, and soil samples hinted at deposits so vast that they could transform national economies overnight. Yet, the initial reports were buried in bureaucratic language, read only by a handful of analysts and government advisors. Investors in distant cities saw numbers, percentages, and projected returns. Local communities saw only the familiar rhythms of daily life, the market stalls, the clay homes, and the river that sustained them. For those in the villages, the first whisper of the mining deal came as a rumor. Men returning from town spoke of foreign delegations, of promises written in legal documents they could neither read nor fully comprehend. Women and children noticed survey markers appearing in fields where yams and cassava once grew. There was curiosity, yes, but also unease. A subtle tension took root like the first tremors before an earthquake. Few understood that these early signals, the meetings behind closed doors, the sudden influx of officials, were the first chapter in a story that would reach far beyond the hills. Across the ocean, analysts in London pored over preliminary projections, highlighting the potential to produce billions in revenue over the next decade. Hedge funds began quietly positioning themselves, while journalists sniffed around press releases that hinted at a historic resource partnership. No one publicly questioned the ethical layers of the deal, the social implications, or the communities left out of the negotiation. But under the surface, a quiet unease began to grow, one that would ripple across borders in ways few were prepared to see. By the time the contract was drafted, the hills were no longer just a place of natural beauty, they had become a chessboard for wealth and influence. Government officials, eager to attract foreign investment, fast-tracked approvals, often sidelining customary land rights. The deal promised infrastructure, schools, and jobs, but the language in the contracts left room for interpretation, and in that space, power quietly shifted. Investors saw security and opportunity. Local citizens saw fences going up where fields once stretched. At the first public announcement, the optics were grand. Flags waved, microphones captured speeches, and cameras recorded smiling dignitaries shaking hands. Yet behind the spectacle, skepticism lingered. Families in the region noticed the absence of meaningful consultation, and whispers of protest began to circulate. Analysts, now observing both the resource estimates and the mounting local tension, noted a curious pattern. The deal was financially brilliant on paper but socially fragile. This imbalance, subtle at first, hinted at the conflict simmering just beneath the surface. Even global journalists picked up on the anomaly. Reports described a groundbreaking partnership, while quietly questioning the consent of those directly affected. Investors were elated, governments were optimistic, and yet the communities who lived on the land felt their agency slipping away. The stage was set. Beneath the hills, the fortune waited, but the first cracks were forming, and soon no spreadsheet could account for the human dimension of this billion-dollar gamble. The deal that had been quietly inked began to echo far beyond the hills. Stock tickers in London flickered with speculation, while traders in New York adjusted their positions in anticipation of projected profits. Hedge funds quietly accumulated shares in companies linked to the mining operation, betting that the contracts signed in a distant country would yield predictable, massive returns. But the markets, as always, are rarely predictable. A subtle misalignment, overlooked local opposition, unclear regulatory oversight, and the sheer scale of extraction was enough to unsettle even the most seasoned investors. Ordinary citizens in nearby towns began to notice trucks rumbling across once empty roads, and drones hovering above fields. Farmers found their lands surveyed and earmarked, sometimes without explanation. Rumors spread of forced relocations and small protests started to appear, quietly at first, in the shadow of the sprawling corporate operations. Analysts on Bloomberg and Reuters began questioning the sustainability of the project. "It's a high-reward, high-risk play," one financial strategist noted, "and the risk isn't just geological, it's human." Meanwhile, governments in neighboring countries watched nervously. Diplomatic cables hinted at unease. If one nation allowed a foreign corporation unfettered access to such critical resources, what precedent would it set? Journalists in Europe and Africa began to investigate, uncovering subtle inconsistencies in reporting, and asking questions that had gone unanswered during the initial fanfare. The quiet tension that had started in the villages was now rippling outward, reaching the highest echelons of global finance and governance. The world was beginning to notice, but no one yet knew how far the consequences would spread. The first tremors hit the stock market unexpectedly. Shares tied to the mining deal dropped suddenly, catching investors off guard. Rumors of protests and legal disputes in the region began to circulate, forcing analysts to revise their forecasts. Hedge funds that had placed millions on projected profits scrambled, recalculating risks in real time. Even seasoned traders exchanged uneasy glances. A deal that had promised certainty was unraveling faster than anyone imagined. At the local level, tension escalated. Families confronted security personnel, demanding clarity about their land, their future, and their rights. Markets in nearby towns saw spikes in commodity prices as uncertainty spread. Local banks grew wary of lending, and everyday transactions became tangled in the fear of impending disruption. Investors in distant cities followed the headlines with a mix of disbelief and dread. What had seemed like a secure billion-dollar play was now entangled in a complex web of social, political, and legal unpredictability. Foreign governments, too, began responding. Embassies issued statements urging dialogue, while trade ministers debated sanctions and incentives to stabilize the situation. Analysts warned of a potential regional economic ripple that could touch industries far removed from the mines themselves. Ordinary citizens, watching from afar through television and social media, began questioning the fairness of global finance. How could a deal that enriched the few leave the many on uncertain ground? By the end of the week, what had started as a quiet deal in the hills had ignited conversations, fears, and decisions across continents. The world was watching, and the stakes had never been higher. In the aftermath, the hills remained unchanged, but the people had not. Roads carved through once fertile fields, fences cutting through ancestral lands, and the hum of machinery were constant reminders that wealth had passed through their lives. Quietly, invisibly, and often without consent. Families who once relied on subsistence farming now faced uncertainty. Compensation promised on paper arrived slowly, if at all. Economists analyzing the situation noted a paradox. Billions were circulating in global markets, yet the communities directly affected experienced scarcity in real time. Investors who had cheered the initial deal now balanced profits against reputational risk. Governments revisited their approvals, asking difficult questions about oversight and accountability. Journalists chronicled the human stories behind the numbers, highlighting children losing playgrounds to survey markers, elders contesting property claims, and local leaders navigating a legal labyrinth that felt stacked against them. The world realized that financial triumphs could cast long, unseen shadows measured not in spreadsheets but in livelihoods. Across continents, analysts debated what had gone wrong. Was it hubris, oversight, or simply the invisible mechanics of a system that prioritizes capital over consent? The lesson emerged quietly, almost painfully. Wealth without inclusion is fragile, and the cost of ignoring communities is not just social. It is economic, reputational, and ultimately human. Months later, the mining operations continued, but the narrative had shifted. Ordinary citizens had found their voices in forums, protests, and negotiations, forcing transparency where none had existed. Governments, pressured by both domestic and international scrutiny, adjusted regulations and demanded greater accountability from corporations. The financial world took notice. Deals once considered straightforward were now subject to deeper analysis, factoring in human and social capital alongside traditional metrics of profit. The hills themselves became a symbol of this tension, rich in resources, yet emblematic of the unseen price of wealth. Investors reflected quietly, understanding that even a billion-dollar deal could falter if it ignored the human landscape. For families, the lessons were personal. resilience in the face of disruption, vigilance over external influence, and the quiet power of collective consent. The story left a lingering truth. In global finance, money may flow unseen across borders, but its consequences are always felt where life unfolds. In the end, the billion-dollar mining deal was never just about minerals. It was about the silent currents of power, the tension between profit and people, and the unseen mechanics that shape lives far from trading floors. The hills stand as a quiet witness, a reminder that wealth, when extracted without consent, leaves more than empty fields. It leaves questions, lessons, and the enduring truth that finance is never just numbers. Every decision echoes across borders and generations in ways we can see, and in ways we cannot.